Now let's move on to the market news. The NSE All-Share Index closing trading today down 0.2% to 36,817.74. Unilever led the gainers chart with a gain of 9%. Other gainers there, PZ, Guinness, WAPCO. Losses seen in the likes of Nestle, Dangote Cement also lost today. The market cap also depreciated by 0.9% to close at 11.76 trillion naira. The Nigerian currency is now trading within the range of 158.28 to 158.38 to the US dollar. Now let's move on and get some more detail into the performance of the market today. And we have with us David Adonri. He's the General Manager at Lambeth Trust and Investment. Thanks for joining us, David. Let's get straight into it. Now, of course, we saw losses in Dangote Cement down 2.2% today, the market down 0.2% as a result. So start by giving us your thoughts on the way the market traded today.
Thank you very much. It's a pleasure being with you. Just like you stated, the All-Share Index of the Nigerian Stock Exchange declined today. The market cap also came down. Just like you mentioned, whenever Dangote Cement takes a fall, it drags the market along with it. And so that was what happened today. Dangote Cement, together with several other highly capitalized stocks, declined very, very severely today. And the combination of these declines forced the All-Share Index of the Nigerian Stock Exchange equities market down. You know, the other stocks that appreciated were not material enough to reverse the pull, the downward pull by Dangote Cement, Nigerian breweries, together with Okomo Oil. So those declines were quite substantial, and they materially affected the equities market today.
Okay, David, but we saw the All-Share Index reaching a new high last week, up 31%. So do you expect the market to share the same sentiment this week? Of course, you know, it's gone down today, but what are your expectations going forward for the week?
Yeah, as a matter of fact, the market started on a very bullish note today. At a point in time during trading, the All-Share Index actually crossed the 37,000 points mark. But dramatically towards the close of trading, a lot of supplies inundated the equities market, forcing the All-Share Index to reverse in the direction at which it was heading.
So do you think it's going to go over that 37,000 mark this week? Do you think it's going to close at over 37 this week?
Well, I actually just expect the equities market to be a little bit stable. Although I will not be surprised if it cools down a little bit, because last week the DMO and the CBN were very active in the primary market with debt issues. And so those are likely to cause some macroeconomic liquidity squeeze, which will drain assets from the financial markets to the fixed income market. And so that, together with the increasing inflation rate, are likely to make the fixed income market more active this week, and perhaps the equities market to cool down a little bit.
Let's talk about the FITSIN Q1 result. We have revenue up, profit after tax as well, up 60%. So your thoughts on the result?
I beg your pardon, please.
FITSIN, the company.
Okay, FITSIN. Are you talking about FITSIN?
Yes, they had Q1 results out today. They saw revenue go up and profit after tax go up as well. So I wanted to get your thoughts on those results.
Yes, FITSIN is a stock that has impacted very positively on the equities market, and especially in the healthcare sector of the market. That company has been turning out very impressive results. The full year result was also very impressive. Now also following that trend is the first quarter result. The distribution too by FITSIN to its shareholders was quite remarkable. So one should therefore not be surprised that that stock is going to continue to gather momentum moving forward.
Of course, that stock actually went up 9% today. And we also saw other stocks in the pharmaceutical sector responding well. Mayor Baker up 8.9%, Evans Med up 9.5%. Now let's move on now as we see the earnings season, of course, drawing to an end. It'd be interesting to know what stocks would you recommend now to a new investor?
No, as a matter of fact, the banking sector remains the major driver of the equities market. And so there are still untapped potentials in that sector. The agricultural sector, as it aligns with the attention of the federal government as far as developing the agricultural value chain is concerned, it's also an area with untapped potentials. But we're also seeing a lot of activities going on with remarkable interest in the building material sector, where you have the cement industry, where Nigeria is about to attain self-sufficiency. So those areas have untapped potentials that investors can leverage on.
But then on
in
the other
equities
hand,
market.
What would you be advising an investor to sell?
You see, we have an equities market really that is at its infancy of development. And some of the sectors that are struggling, like the insurance sector, which is still recovering from the damage it suffered during the meltdown. I think it's recovering, although it's still shaky, you know. But other than the insurance sector, the oil and gas sector is coming back strongly, although investors were not really impressed with the distribution by MRS Oil and Gas, you know, and that is reflecting on its price. But Total is strong. Mobil is also very, very strong. So generally, we have an oil and gas sector that is strong, but just the insurance sector is still trying to wake up. But several other sectors have woken up. The SMEs have not woken up, I regret to state. So we believe that if more attention can be paid to the SME sector, especially as the second-tier market has now been repackaged and repositioned as the alternative securities market, if that sector is supported by fiscal policies, then is a growth area that should interest investors moving forward in the equities market of Nigeria. Please don't forget that the fixed income market, the bond platform on the Nigerian Stock Exchange has started to gather momentum. And so we have that platform as an alternative investment outlet that should interest investors, especially investors who are in pursuit of preservation of capital and have a very low risk tolerance. That sector is where they should actually migrate to.
It will definitely be interesting to see what happens going forward, David. Let's leave it there. That was, of course, David Adorin. He's the General Manager at Lambeth and Trust Investment.